And welcome. This is Mary Ellen McGonagle. You're watching the MEM Edge show. This is the show where we put you in front of where the action is in the broader markets. And certainly we have a lot to discuss. It's been a rather interesting week. Certainly we did see a nice strong beginning to the earnings season, but a lot of other cross currents going on. So I'm going to walk us through where the markets are currently and what you need to be on the lookout for going forward, certainly into next week. And all of this with an eye toward helping you develop a trading plan so you can successfully navigate these fairly tricky markets. So let's go ahead and get started, review what we're going to be going over today. Of course, we will take a really close look at the current markets. Where are they? Can we assess the strength or weakness within the markets? We'll drill down a little bit beyond just the broader markets. And then also I'll review with you some of the shifts in sentiment that we are seeing. It's impacting some of this rotation in and out of these various groups. There were some certainly news items that came out midweek. I'll share that with you and some of the not so subtle shifts that we're starting to experience in the markets. And then we will take a look at what I call daily action list. And that is accessible on stockcharts.com on that first page. It's just a very simple, easy, impactful way for you to get your arms around these potential shifts that may be occurring, particularly for those of you that have shorter term trading horizons. I think you'll find the work really quite powerful. And then also stocks that not only reported earnings this week, but also there are a number of really well-known companies that are due to report next week, and you're going to want to know about them. We'll take a look at some of those stocks as well. So let's go ahead and get started. We'll take a look here initially at this S&P 500. I'm going to make this chart a little bit larger. And here we are looking at a daily price chart of the S&P 500. That is our benchmark here. And we can see that the broader markets overall were getting close to hitting this prior high, but really this week we bounced around just modest gains for the week. But let's take a look at the position of the price relative to certainly these simple moving averages. These are your shorter term simple moving averages. The green is a 10-day and the red is a 50-day simple moving average. And of course, from my work, I want to see not only broader market indices, but when you're looking at your individual stocks, you want that price to be above these simple moving averages. And we can see going back here during this recent September downdraft that the shorter term moving averages, when they are in a downtrend, these shorter moving averages can act as upside resistance. Once we break up above it, of course, we are freer to advance. And we can certainly look at this August, beginning of September uptrend where the indices, when they did break above, again, they are a bit freer to advance. So we are in a good standing as it relates to that. We also want to see these simple moving averages trending upward, and we are seeing that as well with that 10-day that had the golden cross up through that 50-day simple moving average. Up here on the top, I have a relative strength indicator. That's going to be for momentum. We do want to see that in a uptrend and also above this dashed line, that's your net neutral. So the RSI is in good standing. We're not getting this really sure-footed uptrend, certainly relative to other stronger periods in the market, but I'll take it. We're healthy, we're up above that 50. And down below, I have what is called that moving average convergence divergence. This is a momentum indicator, another one. And with this particular indicator, you want to pay attention to the black line crossing either above or below this red signal line. So in this case, during this most recent week, we did get that nice uptick, that black line up through the red, and that is indicating that the near-term momentum has shifted and turned positive. And then we also want to see the actual presence above that net neutral zero, and we do have that in place as well. So overall, we are in a generally healthy market within the S&P 500. And I will tell you from there, you will want to pick your spots I would argue that it is a bit of a stock pickers market. There are periods where all boats are being lifted with the tide, but not so. It's going to take a little more work to, if you are a more active trader. So let's take it from here and drill down beyond the S&P 500. And what I like to do is really get a close look at the sectors that are within that S&P 500. So now we're looking at a candle glance with those 11 sectors. And I've gone ahead and added this relative strength indicator, and I want to sort the performance in descending order. I'm going to go ahead and update it so we have the most current information. And in essence, it will help formulate your opinion, if you will, of the market, because in this particular sort, we are able to view where the strength is in the market. So these are 2-month daily price charts, and we can see up here in the forefront, this is the real estate XLRE, and a lot of this is going to be those REIT stocks. We're going to drill down within, and there are certain areas among the REITs. StockCharts.com does a great job of breaking down that REIT area, because you can have residential REITs, hotel REITs, and so on. So knowing that REITs are strong alone is not going to be as impactful as knowing precisely where that strength is so that you can participate in that strength. Let's take a look. Consumer discretionary holding up, I would say, remarkably well. There is one major component in there that's helping. We'll take a look at that stock. It's due to report next week. But one area that is really very impressive is this continued uptick here in healthcare stocks. This is an area that going into this week was up only 7% year to date relative to other industry groups. For instance, real estate that was up about 35% year to date. So we are seeing a nice uptick here. We are going to drill down and uncover precisely why, and then also how you can participate in this strength. Financials holding up really quite well. A lot of this has to do with strong earnings. A lot of banks reported this week, Bank of America, JP Morgan, and so on. And a lot of them came in with nice, strong numbers. So they're helping support the larger picture within financials. I'll tell you, some of these regionals do still have work to do. Not sure how that slipped in there, the S&P 500. But as you can see, we can then drill down into some of these weaker areas. Consumer staples, interestingly, we're still in a bit of an uncertain period in the markets. The markets are still very headline responsive, and it is rather interesting that these staples stocks are pulling back a bit more than anticipated. And we can take a look at that as well. So from here, let's go ahead and take a look at some of the other sub-industry groups, as well as broader market indices, another candle glance view. So I have the Dow Jones Industrial, the NASDAQ, the Russell 2000, and then some of these other sub groupings. Again, it's really helpful if you have a good sense of where the strength is in the markets. So sorting these various sub-industry groupings, take a look at the transports. They are up here in the forefront, and this is encouraging. You want to see transportation stocks outperforming or certainly on their way to reversing. They have reversed this downtrend, but on their way to near-term highs. And again, this is going to be earnings related. We had a number of well-known transports reporting. And if these, for instance, rail stocks and trucking, if they're coming in with good numbers, it supports the case that the economy is expanding. There's a need for purchased goods to be transported. So I like that this is up here in the forefront. It is positive. This is the yield on the 10-year Treasury, and we are seeing a bit of an uptick here. There is a move out of some of these Treasury safe haven into some of these stock areas. So we're kind of bouncing around here for the week, up around that 1.7% yield on the 10-year, which is another good I'm trying to think of the terminology, but it is good for financial and bank stocks, quite simply. Move into the Russell 2000. This is small cap stocks, and this is another positive attribute that we are seeing this week. Russell 2000 breaking back up above these shorter term moving averages. And then from there, we can take a look at some of these other areas. Semiconductors were really on a tear last week, the beginning of this week, a little bit of a downdraft. China came out with their economic numbers today, and they were disappointing. So we did see some of these semiconductors responding negatively to that news. Most of these semiconductor companies do sell into China, into their economy. And so as we go ahead and look, we can see gold shares are continuing to drift downward. Again, this is the more of that flight to safety that is not as important to investors at this point in time. Volatility staying nice and low down here at that 14 level, but there is one area that is getting hit, and this is IGV is the ticker symbol. Software stocks are getting hit again. So this is part of that shift that I'm going to be sharing with you because there is news relative to that. And take a look at this steep drop here in the US dollar, and that's going to be certainly impactful as well. So now we have a very good sense of where the current strength is in the markets. Let's go ahead, and I want to take that a step further, but there is one other area. There's an actual preset screen that I want to share with you. I think you're going to find it really useful. And then from there, we will go ahead and get into these various indices and areas of the market that are exhibiting strength. Let's see if I can go ahead and move over. So this particular view, and I'm actually going to begin here in the very beginning. So this is that first page on StockCharts.com, and what they provide you with, in addition to a lot of very useful information, is what's called market movers. So you can look at the S&P 500, the NASDAQ, Dow, and so forth by most active, or quite simply by the percent up. It's going to give you those top 10, and from there you can take a look at the charts. And the reason I am pointing this out to you is, number one, I do find it really super useful. Very quick assessment, easy to figure where the current, certainly on the daily strength is, and from there drill down. What I've done is last Tuesday, I took a snapshot of that strength in the S&P 500, and I did a candle glance view. So this is from Tuesday, just to kind of show you how impactful and powerful this can be, because what it has allowed me to do is keep that Tuesday list. This is the top 10 up by percent on Tuesday, and we can see subsequent to those Tuesday moves that a number of these stocks have continued to advance. So if we are in a market that is continuing to at least support an uptrend, you will see this type of action. So this is United Healthcare, UNH, managed care. They came out with numbers, gapped up, and then it has continued to advance. This is, again, for some of you shorter term investors, but you also can make longer term calls, if you will, on the markets. This is First Republic, a smaller bank stock, gapped up. It's kind of waffling, but hanging in there. But Cigna is another of those managed care stocks, and this is that gap up on Tuesday to 160. The stock is now at 166. It has continued to advance. The point here is Humana. So we can really see a trend emerging within healthcare. Cigna, Humana, and UNH are all managed care stocks, and there are positive dynamics that are taking place. NVIDIA, this is that gap up on Tuesday, gave a little bit back. This is the pullback I talked about within semiconductor stocks, but hopefully this kind of snapshot where I took a look at it on Tuesday and had it continue to advance into today's close. So you can see the potential power of paying attention to these market movers, because they can really get you in front of some interesting moves in the markets. So I'm going to take a moment here. We're going to take a brief break. When we get back, I'm going to share with you some stocks that have reported this week, some that are due to report next week, all with an eye toward potential shifts in the broader markets. We'll be right back.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Chicago, July 21st through 23rd, dozens of the most respected traders in the world, including Rick Santelli, John Najarian, Tom Sosnoff, Linda Rashke, and Ralph Akampora, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, commodities, forex, futures, and cryptocurrencies. Claim your free pass to join them at chicagotradersexpo.com.
And welcome back. This particular stock that I'm going to begin with during this segment is going to help review some of this shift in sentiment that I talked about. This stock is called Workday, WDAY. It is a fairly large component within the computer software space. So we can see that software, and using this chart, certainly it was a very big winning group going into this August correction. A lot of these software stocks fell pretty much out of bed and were trying to reverse, but a bit of a head fake there. So let's take a look. This is a gap down that occurred with Workday in particular on Wednesday on super big volume. And this is something that the market movers would have shown you on. We were just looking at percent up. You can do the percent down, and this would have easily shown up. And take a look at that huge volume. That is pure distribution there. So you would say, well, okay, that's one stock, but let's go ahead again using StockCharts.com. We're going to go ahead into the sector summary. We're going to take a look at technology over the last week, and we can see that software was down 3% for the week. But that Wednesday tip of the hat really was a sign that any potential downtrend reversal was not going to take place. Now, when I look at a lot of these sub-industry groups, I like to sort it by market cap because the bigger names are going to be a bit more impactful, certainly as far as telling a story. So let's go ahead and drill down and go into some of these larger names. And we can see a lot of these names, Adobe, Autodesk, these were big winners. Salesforce going into the first half of the year, and they are suffering. So I would argue to you that there is a really defined shift in sentiment that already did occur, but it is being really compounded with this week's action. So software stocks out of favor, but let's go ahead back. And I did want to, I also wanted to share with you why Workday was down on that particular Wednesday. And that is because the company had their financial analyst day and the management was not upbeat. They guided down for the year. So what occurred from there is Salesforce, CRM, Adobe, all these other Splunk big names really kind of responded in kind with Workday. And when you see that occur, that's telling you that the area is very weak. It's not able to withstand what would be normal news. Workday management guided down because they're doing a lot of innovative development and they need the capital for that. Let's take a look at another area of the market. I'll start by sharing with you a stock that actually, let's see if I can pull up a better example. And this is Cardinal Health, CAH. Let's go ahead and pull up a larger daily chart here. And this stock is in the medical supplies. And this is part of another group movement that took place on news on Wednesday. And that is news that the opioid litigation that was impacting a lot of these medical care companies negatively, there's talk that they are going to potentially settle. So from there, we can then go ahead again and really define that information and get a really good handle on the fact that healthcare stocks, in addition to UNH and the other managed care related stocks that were up for the week that are helping healthcare, this particular bit of news really helped some of these what are called medical supplies. Take a look, they're up 4% on the week, so showing quite a bit in the way of strength. Now, it might be helpful. Let's go ahead and take a look at the group graph because I found this really quite compelling. We can see that these medical supply stocks peaked in price back here at the end of July. This is another area that sold off with the markets but had not recovered until more recently. So this downtrend here is very clearly reversing. We're seeing this particular index break back above the simple moving averages, RSI, MACD, not only having that positive crossover, but now up above this net neutral zero. So this is that shift that I was sharing with you. After this, I'm going to show you the software so you can also use the charts to tell you that there is either uptrend or downtrend reversals taking place. Now, let's take this a step further and go ahead and take a look within medical supplies. You want to be able to take advantage of that potential downtrend reversal. First thing I want to point out to you, and you will see this, some of these stocks are going to have these big moves. I talked about Cardinal Health. Amerisource ABC is another opioid litigation rally related. But beyond that, a number of these others are going to be really kind of down and out names. So what I like to do is sort the given group by this SCTR. That's your stock charts technical rating. The higher the number, the better. And from here, we can take a look, just hover over that ticker symbol and take a look at some of the underlying potential outperformers in this group. So really any number of these stocks. I'm going to take, uh, let's see, because there really are any number that we can choose from. Let's take a quick look at IDXX. And we can see this particular stock was down certainly in that late September, beginning of October area. But what we want to focus on here more recently is this potential downtrend reversal. The stock's price now is up above these key simple moving averages. And you can also see the shorter term green 10-day is poised to cross up above the 50. We call that a golden cross. Now, I am not sure why this happened. I would want to know more because when you see this type of gap down on volume, it certainly there's some kind of news that's out there. This particular company is due to report earnings in 2 weeks, so it is potentially turning. It's not with that that I would like to see relative to earlier big uptrending periods back here. So again, you can just simply use this SCTR and take a look by hovering over some of these underlying stocks. We can take a look at this as another stock, a bit smaller. This is CNMD, ConMed. And when you see these stocks up, this is during that August-September period. This is showing you superior outperformance in an otherwise very difficult environment. That is a sign of strength. And oftentimes that strength is occurring for very sound reasons. It's going to be fundamental. The stock eventually gets hit by the broader markets, but here we are again with a stock that is potentially reversing. Now, this reason for this uptrend here, the stock gapped up here on very strong earnings, and you like to see that. And when the downtrend is reversing, it's with an eye toward recapturing that prior uptrend. So we can see it's just poised now to break up above the simple moving averages. RSI is positive, and that MACD is having that momentum downtrend is reversing. The momentum is turning positive, the black line up through the red. So this is how we can not only get your arms around the potential shift in sentiment within a group, but also then drill down into individual candidates. Let's take a look because I would be very remiss to not share with you some interesting looking charts of stocks that are due to report their earnings next week. And I talked about a lot of well-known companies. Amazon is due to report. Very disappointingly, we can see that this stock, it's been an underperformer, no doubt, over the recent past. And today it was poised to break up above that 200-day simple moving average. That would have been quite bullish. You can see it was met with resistance. The stock did pull back about 1.7%, potentially reversing this possible downtrend reversal. But more importantly, I'm going to take us to a weekly chart because it will give us more perspective. We can see Amazon certainly has in the past been a very big winner, but we're in a period of certainly underperformance. The stock has been in a bit of a tight trading range. But if we go back historically and take a look at other periods when it's been able to emerge from these this flat basing period, I'm taking us back to 2017. This is this October gap up, and it took really an earnings report. So the company is due to report next week. So ideally, if we could see that nice gap up on earnings, you can see how it can easily springboard Amazon into a nice uptrend. Let's take a look at some other stocks that are setting up really quite nicely going into next week. I'm going to pull up a daily chart. This is AT&T. Take a look at this stock. It's really poised to break out of this nice base. We got nice volume today. There was news as far as AT&T. There was an activist that owns a large portion and of the stock. So it was in a bit of a downdraft because there were concerns as to the activist investors' actions. But there's talk today that they are resolving their differences. But more importantly to me is the fact that this RSI MACD is positive. The stock is exhibiting very positive characteristics. AT&T has a nice 5.5% yield, which would serve you well considering that we are overall still in a period of uncertainty despite a broader market that is generally healthy. Here's Verizon. They're due to report next Friday, a nice uptrend. We're looking at a daily price chart, another stock that had a nice 1% move. This is all about 5G and that Verizon being in the forefront. These 5G stocks are starting, some of them, to come back into favor. So a nice uptrend here, a 4.1% yielder with Verizon. Now, I do want to share with you some companies that did report this week, already reported. And these are stocks that where we could see a potential shift. I talked about banking stocks. This is State Street, and these bank stocks, for the most part, have had a really tough go of it. And what I wanted to point out to you today is State Street came out with numbers. We can see this gap up 6% move on volume. But more importantly to me is we can see this super lengthy 1-year downtrend. Any kind of downtrend reversal attempts have failed. Now we have seen a break back above this 200-day simple moving average. So keep an eye on this one. This could be the beginning of a nice downtrend reversal. The next step that we are going to want to see is these longer term. This is your 50-day simple moving average. We want to see that in an uptrend. So more upside action there would be quite constructive. Another big winner today is Kansas City Southern. KSU. This is another one that gapped up 7%. Now, some of you may feel that you missed the move, but two signs or points that I want to share with you. One is when you see these gaps up and the volume is just off the charts, that's telling you that institutions want in. These guys are not going to build their position in one day. So one of two things may occur. We could see the stock pull back given this healthy advance, or we could see the stock form in a back and fill type of formation while that moving average catches up to it. But either way, KSU looks quite compelling. And let's take a look at a stock that did come in with good numbers. This is consumer staples. However, let's take a look. Gap up almost 2%. And we also did get that volume. We are seeing this moving average potentially turn black line up through the red very bullishly. RSI is positive. For my work, I would like to see a break above that 55, which could easily lead to a nice leg up on this 3%, actually 2.9% yielder. I think I have time to share with you one other stock that did not perform well uh, after their earnings. This is American Express, AXP. In that financial space, it's down about 2% on big volume. This was an area that was potentially turning. I'm going to share with you Visa, MasterCard, some of these big credit card processors are just not coming back to life. I'm going to leave it at that. For those of you, have a great weekend and happy trading next week.